So how to convert the resources into battery-grade lithium carbonate and lithium hydroxide, that's basically the bottleneck. And worth noting, more than 70% of this refining capacity is located within China. So I guess that's also one of the incentive for the IRA to establish a supply chain that's basically independent from China.
I want to thank our panelists who are going to be talking about battery materials investment. So, starting closest to me, we have Robert Wrixon, Managing Director of Starboard Global Limited, Ling, Executive Director of Metals and Mining at Standard Chartered, and Cormac O'Leary, Managing Director at Electrios Energy. So maybe to kick things off, if you want to just give us a quick intro to, who you are and why I may have invited you.
So I'm a founder and currently managing director of Starboard Global. Starboard is a private equity investor in the metals and mining space, but we're really more strictly speaking venture capital, I would say, because we invest in exploration development assets. We try to incubate them privately for a while as much as possible, provide management, provide technical expertise, and we've got capital markets reach also. So we then, once we have progressed our projects to a point where we feel it's investable, then we will either look for a trade sale or list. And to date, we've listed 7 different mineral exploration companies, 6, 3 on ASX, 2 in Sweden, and 1 on the main board of the LSE. And the previous, we've done things like tin, tungsten, and potash, but at the moment our focus is very much on things that are relevant to this panel: electrification, batteries. So copper, we're very heavy copper, nickel, cobalt at the moment. So yes, that's me.
Hi everyone, this is Ling. I'm working at Standard Chartered Bank in the metals and mining space. So what we do is M&A and also project finance. I'm very passionate about battery materials, have been involved in quite a few battery materials M&A business, such as the recent acquisition of LG Chem into Piedmont, and also TNT Lithium and IGO transaction. So yeah, looking forward to the discussion today.
Hello, I'm Cormac O'Leary, MD of Electrios Energy. We set up Electrios in Hong Kong in 2013, primarily focused on the Chinese market. We provide consulting services on the entire lithium-ion battery supply chain, upstream, midstream, downstream, for predominantly international customers who either want to source materials in China or provide materials into China, or help Chinese companies as the market has matured over the years into North American markets or European markets. Basically, we're dragged across the entire supply chain. We're talking about mining phosphate ore 1 minute and then battery management systems the next. So hopefully my broad experience might contribute to the panel.
Absolutely. So I thought we could start broad and then maybe focus in a little bit deeper. So starting kind of with a global geopolitical perspective, the US IRA and other government strategies to support the green energy transition are being seen to have pretty global impacts. So where do you see some of these programs creating new opportunities in the mining space? And how are some of these policies likely to change the market long term? Ling, do you want to kick us off?
Yeah, sure. So I think, well, even though the implementation details of the IRA are yet to be released, but we have definitely seen the impact that's been directing investments into North America, as well as countries with free trade agreements with the US. This is number one. Number two is we've seen companies along the supply chain, they've been making strategic changes to be more compliant with IRA. So for example, in terms of M&A, we have seen the North American projects have become more and more attractive. Basically, you can name it as an IRA premium. We advised LG Chem making a strategic investment into Piedmont, which is a NASDAQ and ASX listed lithium mining company. And the objective is very clear, is basically to help LG Chem to secure the spodumene supply to feed into their battery production. And not only the Koreans, but also you've seen companies like Chinese. They're also making investment into South Korea. They're making precursor manufacturing facilities in country to make sure along the supply chain there's more and more elements which are compliant with the IRA. And also, looking at Korean companies, they've been withdrawing from Indonesia. There had been some investment around battery production and also even the EV manufacturing inside the country, but given, it's not a FTA country. So, lots happening, and given the policies and incentives laid out by the IRA, actually, lots of capitals have flown from Europe into US, and now we are seeing, EU, they are also laying out, certain incentives around the Critical Mineral Act.
Feel free to.
Yeah, well, I mean, I agree with all that, and it's the IRA is actually talking. It involves vast sums of money, and to me, actually, when this was originally announced in its earlier incarnation by Biden, where there was a bit more money involved, it was supposed to be $2 trillion at the time. I think it's down to 700 billion or something now, but and a huge amount of that money was towards electrification, and within that, EVs, and within that, the raw materials sourcing for EV materials. I'm not a huge fan of government picking winners, but if the incentive scheme is right, then that's great. But what really got me excited, and around the same time, the EU also announced kind of an aspirational figure of around a similar thing. It wasn't 2 trillion, it was about 700 billion, of which about 200 or 300 billion was going to go to electrification and all that stuff. And to me, when that happened, I think it was a couple of years ago, when those were announced, and of course they've been pared back since, inevitably, but it seemed to me that actually I became, for the first time, a true believer in EVs, EV batteries, because EVs are always going to have a certain market penetration, right? It works for some consumers. But in order to be mainstream, you need the infrastructure to support all of these electric cars or motorcycles or whatever it is, EVs of all shapes and forms. And to be honest, it needs a charging network. Every petrol station needs to at least have a charging station or be replaced by a charging station. And that takes trillions of dollars. And it has to be public money, because Tesla's not going to build it. They're not going to build it and help everybody else, their competitors, right? It has to be public money. And the type of money that we're talking about now, for the first time being spent whether it's through IRA and through what the EU haven't got around to exactly spelling it out yet, but hopefully they will. That can actually be spent wisely on creating the infrastructure that's required to allow better penetration of EVs. And this is not something that happens overnight. It's going to take a long time, but it looks like the governments of Europe and the US are actually serious about doing this now. And that's a great thing. That's my view anyway.
Yeah, interesting point there. I remember 10 years ago here, and I used to do events like this, and most of the discussion was, will it happen? Is it going to happen? I remember clearly, and I believe I said it was going to happen. But anyway, it happened, and now we're playing catch up, and EU is particularly late to the scene. US has always been involved in battery production, battery materials, battery R&D, led the way. Most of this technology comes spin out from the US Department of Energy research, but they didn't really put their money behind their own technology. All the IP is basically US. All the production is Asia. But Yeah, and then we see the money coming in are from certain acts, DOE's making money available to the Loans Programs Office, and they're giving vast sums of money, 200 million, 300 million, to technically startups who've never made a kilogram or a ton of the materials they're supposed to be making. So quite unproven. And there's going to be a lot of, and I think one of the themes of this is, where's the next funding? Funding going to be available for exploration work, upstream work, midstream, and it's, over the next 2-3 years, it's not predominantly, but there's going to be a significant amount available from government or public funding, and it's an exciting time. When the IRA first came out in November 2022, or was it September, we were retained to, establish whether the US had enough materials to be self-sufficient. And at the time, we were tracking well over 100 lithium projects in the US, North America, really. We've calculated if 20% of them come to fruition, there will be just enough lithium for the US market in 2030, which, is quite surprising finding. Of course, cobalt is a different story. Nickel, they will be reliant on Canada and other free trade agreement nations. Europe might be boxing themselves in, recently the CRMA, Critical Materials Resources. Europe doesn't have the same vast resources as North America, and is mired in planning and environmental legislation that will really hinder the development for Europe to be self-sufficient. So they're going to be reaching out to, I don't know what the European term is, but friendshoring our friendly countries. I'm thinking maybe North Africa, even Africa itself, to supply the materials for Europe.
If I could also comment on that. So when we talk about lithium resources, so it seems like this Earth doesn't really lack of the resources. It's everywhere. However, like Elon Musk has said, it's really the bottleneck is around the refining. So how to convert the resources into battery-grade lithium carbonate and lithium hydroxide, that's basically the bottleneck. And worth noting, more than 70% of this refining capacity is located within China. So I guess that's also one of the incentive for the IRA to establish a supply chain that's basically independent from China. And that's going to cause issues. So when we talk to our clients, it seems to be, you're talking about what's the impact, for the IRA, and it seems going to be have this bifurcated supply chain. So one for China and the other one for the rest of the world. We don't know how long this is going to take, given, if a majority of the lithium carbonate and hydroxide are produced from China, although we have Livent, Albemarle, and also SQM who are producing from South America, but majority of the capacity remains this part of the world. So I guess to some extent, in terms of the global supply chain, I guess is not a good news. And this really resonates with, last week at the FT Commodities Forum, when all the trading companies they were talking about, it's like over the past 10 years, we have been working together a efficient global supply chain. However, it seems it's been weaponized, and so what does that imply? Maybe higher cost, duplicate capex, less transparency, and also all those issues which could potentially slow down the electrification process.
Certainly. I mean, in the last session, Betty mentioned something very similar in terms of it's not necessarily that there is this massive supply deficit, it's that there are these changing supply chains that's really impacting, access to these key materials. What do you, do you want to go ahead?
No, I was just going to say, don't feel sorry for the traders. They'll make plenty of money no matter what. In fact, a bifurcated supply chain is probably just gives them, more market inefficiencies to exploit. So, yeah, it's unfortunate but true.
I guess to go along with that, I mean, how real is that supply deficit for these key battery metals? What are you seeing from the markets? Go ahead.
Sorry, Amy.
Just looking at, how real are the actual supply deficits? There's differing perspectives, as we said, about, how it's being impacted by the supply chains and other factors as well.
Yeah, I know that the supply deficits will be real. They're not real at the moment because I think what you're looking at is a market that's in fairly well balanced. There is pent-up demand that has to come through for electrification, particularly in copper, but presumably also, almost certainly in nickel and cobalt to come. Lithium, you're seeing it now. Based on what we've said about the aspirational goals around electrification and EV market penetration, there's a huge amount of copper required because, okay, this is a battery metals forum, but if we're talking about batteries, we're talking about EVs. I mentioned earlier the charging network. That's going to require vast amounts of copper. Wiring everything up and thick copper too, for fast charging. It's not just thin copper wire. And presuming that, like nickel cobalt batteries continue to be the battery of choice for certain applications. I mean, nickel sulfides in particular are going to be under huge demand. But what we're seeing at the moment is a recessionary environment, which is keeping a lid on demand. So you're not seeing it at the moment. But what it is doing is keeping prices relatively low. The incentive price to do really significant exploration for copper or nickel sulfides is not there yet. And it needs to, I would say, copper needs to get to $12,000 a ton minimum and stay there for 5 years. Nickel needs to get to $30,000 or $40,000 per ton minimum and stay there for 5 years. And then you will see not only juniors and junior exploration companies like what we deal with, but also the majors finally putting serious money into exploring for these things because it is coming, and the longer this happens, this is just kicking the can down the road, and it means that when the supply deficit crunch hits, the price reaction is going to be even more violent. And I don't know when it could be. It could be next year. It could be 3 or 4 years. I'm not sure, but it's coming, and then you'll see plenty of people scrambling around and lots of exploration. But hopefully, people who are positioning themselves now will do very well in the future, as long as you're picking the right projects.
Yeah, and I guess also in terms of the recent lithium price fall, people start to ask, it seems it's okay. Is it really in deficit? What does the price tell us? But I do believe this is seasonal, and it seems it's if we look at the domestic China lithium carbonate price, yes, it has fallen more than 50% since November. Although, North Asia, in terms of Japan, Korea, lithium hydroxide price, it hasn't really, dropped that significantly, but there would be a time lag. This is seasonal, and why we say that is really because of the China emission standard, which would be taking place 1st of July. So basically, those conventional ICE cars who cannot meet the new emission standard, they would become illegal to be sold to the market from 1st of July. Hence, you've seen all the automakers, they've been, destocking, selling at 50% discount. So, for example, OD6, which is an executive car. So now you can basically buy it around $30,000 US, which is ridiculous. It would have been, twice of that price. This is a seasonal, given the shift in the policy, and also if we look at the past 3 years, there has been a explosive growth in terms of the EV sales in China. So 2020, we had about 1 million units sold. And then 2021, that's 3 million. And then last year, that's 6.5 million. So in terms of the EV penetration rate, that has been close to 30% consistently over the past 36 months. And if you have a larger growth base, of course, the growth rate would, normally slow down. So these are all kind of temporary seasonal issues, and definitely in terms of the long-term perspective, it would be in structural deficit. This is driven by, the explosive demand of the electrification process, not only in EV, but also in the battery storage. And also in terms of the supply, how to develop a mine normally would take 5 to even 10 years. If we look at the US, permitting takes like ages, yeah. And also the DOE loan would take ages as well.
Yeah, it's an interesting time in battery materials this whole quarter. Nickel sulfate, cobalt's down, nickel sulfate's flat. Earth's down actually as well. Manganese is flat. As you said, lithium is down more than 50%. And I'm not sure it's seasonal. There's a lot of factors going on at the moment. CATL drew a line in the sand valuing lithium carbonate at 200,000 USD or RMB a ton. And when they announced that only like 2 weeks ago, everyone thought, that's crazy. But it's lithium a couple days, on the 25th was 260,000 lithium carbonate RMB a ton. So it's driving down the price for sure. And a lot of global analysts, or there's a lot of well-known lithium analysts, but in truth, the Chinese run the lithium market. The Chinese know most about processing, they know most about the resources that are available, and the Chinese government analysts and industry are very bullish on the amount of lithium that's coming, and certain international analysts as well. But it's really tricky. It's really tricky to see that it will ever go back up to 600,000 RMB than it was in December. But at the moment, there's all sorts of games being played in the market. Producers aren't happy to sell at 260,000 RMB a ton. They think it's going to go back to 500,000. So there's inventories being stocked. There's inventories being destocked. So it's a strange time in lithium carbonate for sure, jumping down 50%. But as you said earlier, Richard, Robert, there's going to be there's deficits coming in all the battery metals. This is temporary, maybe seasonal, but it's a long season.
Yeah, and if I could comment on nickel, the lower hanging fruit of nickel in terms of nickel sulfide resources is basically depleting everywhere, and people rush to Indonesia. So laterite, of course, it depends on smelting. H power, and who has the technology, the Chinese. So nickel is very hard in terms of talking about the fundamentals, given the market is also being lots of financial investors, hot money participants in this market. But looking at the fundamentals is really, everyone would be kind of saying, yes, the price would coming down, given, what Qingshan has been doing, what Huayou has been doing in terms of their plan, 900,000 tons nickel content from H-power projects in Indonesia, with the engineering, the construction capability and the efficiency of the Chinese, is all rushing to the market. However, the nickel market is not, dominated by the fundamentals. It's very influential, very emotional by the futures market, by the hot money. So, yeah, very tough. And looking at maybe 2 years ago, payabilities for nickel sulfate, more than 80%, but now 70%. And people, those smelters, they're basically converting nickel sulfate back into nickel metal, given the economics. So, yeah, it's really difficult to have a clear conclusion around nickel. And then if we talk about cobalt, it's basically a DRC story, and now complicated by the Indonesian story, given cobalt byproduct within the MHP product. I guess the distinction between lithium and cobalt is really all the OEMs, they're trying to get hold of lithium as much as possible. However, they want to get rid of cobalt as much as they can. So that has basically set the scene for the market outlook for cobalt. And as the LFP technology, is improving in terms of the battery intensity, as well as the safety standards. So I guess, there's a big question mark for cobalt.
Well, Tesla signed some cobalt deals, and there's the cobalt responsibility, not act, but initiative, exactly. Yeah. But, I could expect cobalt and DRC to clean up at some stage. I won't give the timing there, but yeah, as you said, there's cobalt coming in from other sources, which might carry a premium if it's not DRC. You got Philippines also, you got Canada, one project in the US, Brazil. So new options, but there's going to be cobalt in the cathode for a long time to come. I think they're not going to be able to get rid of it if they're using NMC.
Yeah. How about future for nickel?
I remember actually, in the last one-to-one we done here, there was the last question was, which cobalt or nickel? Who should we invest in? I think we all gave a resounding nickel. So we were proven right. 2019 was it, Amy? Yeah.
Yeah, proven right for now. You just never know what happens in the future. But I mean, I would have agreed. I think
we didn't say iron anyway for iron.
Yeah. Well, nickel's interesting. I think nickel's a good bet if you're an investor, and this is an investment conference. I mean, because nickel still has a base load demand from stainless steel, which is still the vast majority of nickel usage. The great thing about nickel sulfide projects, which is what we'd like to focus on, is that it will always have a cost advantage. And if the EU, the Western world, the OECD is serious about traceability and a sort of a carbon passport, this nickel coming out of Indonesia first of all, to get the quality, high purity of nickel that you need from a nickel laterite, nickel pig iron, a nickel laterite is not very easy. It requires vast amounts of power. And if that power is coming from coal-fired power stations, it's just not going to pass muster, And at the end of the day, it's not like there isn't nickel sulfide out there. There is. You just have to explore for it. So, a good nickel sulfide deposit in a good tier 1 jurisdiction that can offer traceability and a decent carbon footprint is always going to be very, very valuable. And I would point to Nordic nickel, for example, as a good example of that in Finland, and Pivotal Metals in Canada. So I kind of think, and also, by the way, I mean, if you're taking, at the end of the day, nickel from nickel laterites can always be used in stainless steel. There's no problem with that at all. There's not necessarily a point. So I think what you'll see is that nickel sulfides will be pushed towards creating sulfates and hydroxides and precursors for battery minerals, because that's the more logical feedstock. But even with that, the growth in nickel, that's, assuming sort of like a 50-50 split between LFP and NMC going forward. I don't know, Cormac, you might have other ideas on that, but assuming that, you're still going to need the nickel sulfide production of the world to more than double by 2040. And that's tough because nickel sulfide deposits tend to be hard to find and small. But when you find them, boy, they're worth a lot of money. So yeah, again, investment tip. I hope it's as prescient as your nickel over cobalt from last time. So, but
be cautious on the LME.
Well, yes, okay. Well, you don't have to worry about the LME if you're investing in the mining company.
I was thinking maybe we could go a little bit deeper into that kind of battery chemistry discussion, future of LFP, its growth outside of China. How does an investor make a smart decision on these types of battery materials based on the future of the battery, I suppose?
Yeah. So yeah, Analysts will also say they never saw LFP coming. It's really surged over the last 2 years. In China, of course, is main market. It's over 70% of EV batteries. But still, NMC predominates globally for VW, Tesla, use NMC as well as an NCA, of course. But we see LG, SK, Panasonic. If you disregard CATL globally, or the Chinese market, LG is the biggest battery manufacturer. If you put CATL and LG side by side, CATL is the biggest LFP manufacturer, battery manufacturer. LG is the biggest NMC battery manufacturer. So you can never put them side by side as just battery manufacturers. They have two different strategies. There's been a lot of announcements about LFP globally, but not much follow through yet. Tesla obviously selling the Made in China standard Made in China Model 3, and that's been relatively successful. But if LFP was to take over globally without China, it's not going to happen. There's nobody producing LFP CAM outside China. Nobody knows how to produce LFP CAM, cathode materials, or even iron phosphate, for that matter. And what's a lot of work I've been doing is basically telling companies how the Chinese do it. And then the resources aren't there. Europe doesn't have phosphate resources. You need high purity iron, 99.9% iron pellets, not steel. And that's not available in Europe either. And the scrap market is not capable of supplying it also. For Europe, US has phosphate resources. Iron then is a different story. You might have iron ore resources, but turning that into 99% iron pellets is a different story. China doesn't use the 99% iron pellet. They use iron sulfate, which is one of the methods to produce lithium iron phosphate. So during our studies, without China, it's very difficult to ramp up LFP production.
Yeah, I guess that has a background reason to that. If we look at the charging stations, the infrastructure, so basically 2/3 of the EVs in China, they are charged in the public charging stations, versus in the US, it's only around 1/3. So that's to do, with each country's infrastructure conditions. But yes, LFP's market share has been picking up outside of China since early last year. Exactly, yeah. That's to do with the IP, I suppose. The IP, most of the IP have been expired. So yeah, they have become, a lot cheaper to be produced outside of China. But when we hear from clients, inside China versus outside of China, definitely different views. And these two technologies, these two chemistries, they're not going to, of course, compete with each other, but they would coexist, hopefully harmoniously. Yeah. And,
Well, it's good. I mean, LFP is to some extent good for the cell manufacturers because it gives them something else to turn to if the price of nickel and cobalt gets too painful for them for a little while. So it'll always put a little bit of a cap on the upside of the demand. So that's useful. That's useful for the world. I mean, again, I know we're talking about batteries here, but I don't want people to forget about copper because EVs obviously use a lot of copper. This is a battery materials panel, but as an adjunct to batteries, the copper that's required for cars itself, the infrastructure for the charging I already touched upon. But if you go further down the line, where is that electricity coming from to charge your car? If you want to basically re-electrify your network and add as many renewables as you can, wind turbines, solar, or even just moving away from coal to natural gas, which is all part of the decarbonization of the electrical grid. All of this requires new copper wiring, particularly turbines and solar power. So again, it all comes down to more copper, and it gets even worse than that, or better if you're a copper producer, because when you have a lot of renewables in the grid, all of the renewables have to be backed up with reliable power that you can turn on and off, because everyone loves renewables except when it's nighttime and the wind isn't blowing and you don't have any electricity when you turn on your light. So to avoid that, pretty much for every gigawatt of generation capacity, in Europe in particular, I know that Germany does this, it has to be backed up with almost the exact same number of megawatts or gigawatts of power in reserve that can be turned on at short notice, which basically means gas or coal, but mostly gas, because nuclear is base load anyway. So that means you have to double up your connections to the grid from 2 different electricity sources, double the amount of copper that you need for all that wiring. So a lot of this is just, it's only becoming clear now, and people who have gone down the road of electrifying their network, like particularly Germany, Denmark, people who've actually got a large amount of percentage of renewables in their grid now. They constantly talk about how the amount of copper that was required for all this just far exceeded their wildest expectations. And this is coming to almost all other countries too. So just wanted to point that out. It's not all necessarily about, from our point of view, it's not all about nickel, cobalt.
There's copper foil in the batteries as well, Robert.
What?
Copper foil, 1,000 tons of copper foil per gigawatt hour.
Yeah.
So you can,
I just continue to make my point for me, Cormac. Thank you. With good double act here.
they like to take it out, but...
Yeah, and lots of transactions, lots of deals happening for copper foil. Jiangxi Copper, they've just they're in the process of delisting the copper foil business, and also quite a number of other copper smelters that are doing that as well. And then if we look at the whole spectrum of commodities, definitely copper. Everyone loves copper. Look at BHP, their intention around Oz Minerals. And also Rio, in terms of their doubling down of the interest in OT in Mongolia. And, yesterday was being announced around the Luding. So everything's towards copper. So, and if we look at the supply side, definitely in terms of the mid to long term, the supply in terms of the different mines in major production countries, Chile, Peru, in terms of the permits, the community issues, it's lots of doubt in terms of the supply, given the demand.
We're about to start wrapping up the panel, but I just wanted to see if we had any questions from the audience before we start to kind of go over some final statements. All right. If not, I suppose just asking the panel, where should we be focusing next? Obviously, copper, key area. But, what's next for the industry? Where should investors and junior miners, where should our audience be focusing?
Well, all the battery metals are hot, so technically you can't go wrong. But the junior miners and exploration is, underfunded, massively underfunded. Compared to in 2022, EV industry got 100 billion more or less funding. Battery factories, our investments is about 40 billion, and then exploration is like 10. It's massively underfunded. But if you're asking me which metal to go after, it's got to be lithium again for me. Sorry, copper. Okay.
Copper.
All right.
I'm going to have to disagree with my esteemed panel colleagues here. No, I agree copper is good, but actually, I think what you've seen with lithium, it was interesting because lithium was at the forefront of everything that happened, because lithium had to go from almost zero to hero, right? Lithium has other uses, but not large ones. So the amount that lithium had to increase its supply base so dramatically to meet the demand for EV batteries, right? Copper has a lot of other uses, right? And it's already used in a lot of electrification. So that's going to come through a little bit later. And nickel's sort of in between, because nickel is not a big global market. It's about 2 million tons per annum, nickel metal. of which half is sulfides and half now is through laterites. And if you look at the growth in nickel supply over the last 30 years, sulfides have stayed at about 1 million tons per annum, and all the growth has come from laterites. Basically, that's the case. But interestingly, so you already have a base demand of 1 million tons per annum, but that probably needs to go to about 3 million tons per annum, or 4 million tons per annum, actually, potentially. If you look, because almost the stainless steel market's going to grow at its normal rate of about 2 or 3% a year, like it mostly does in accordance with GDP growth, with little ups and downs. But almost all the real growth in nickel is going to come from the battery demand, which probably, unless there's a big step change in the processing technique, and to be able to get battery grade nickel from laterites, it's all going to have to come from nickel sulfides. That hasn't yet, I mean, you saw this strange spike in LME, but that was pretty unrelated to actually fundamental supply demand issues. What you will see is that ultimately there's plenty of nickel sulfide around the place to be able to create the batteries that are required at the moment. But when that penetration rate for EVs really starts to move, the world doesn't have enough nickel sulfide. And so that will happen. And it will happen short and sharp. And we've seen nickel before do this. Nickel can easily get to 50 grand. Okay. And it has done in the past and stayed there for a little while. And so I think in the near to medium term, you're going to see nickel have the price run. And it's going to make a lot of people very wealthy if you're into nickel production, nickel sulfide exploration. Potentially people in this room. And copper.
Yeah, the reason I didn't say nickel was nickel sulfide. I don't know, it's not going to help you, but it was thought to be dead on what's happening in Indonesia. And as there's some ESG reports coming out, and it's Chinese ESG reports, and it's looking good. But VW, Tesla are willing to sign deals to get this nickel from Indonesia. The rest of the industry is not too happy. Does that mean the OEM are they ESG compliant? Or are the OEMs just waiving it and willing to take carbon intensive, environmentally polluting nickel matte or NPI even from Indonesia, and just the risk. But so nobody thought they'd be able to do it. Actually, in the last 2 years, they went. Could they make nickel matte from laterite that could go into batteries? And they've done it in 12 months. I mean, it's phenomenal. So you can never doubt them. That's all.
We need to take you to Indonesia. Yeah, I guess in terms of the H-Power projects, it's impressive. And of course, there's lots of discussions around the ESG, especially around, the thermal coal power stations. But Indonesian government are working on that. We don't know about the timeline yet, but in terms of, if they really want to get Elon Musk to invest in the country and also to establish a end-to-end ecosystem around the electric vehicles, they have to do it. They have to transition their energy source. They did have the hydropower. If you remember why initially Element was set up is really because of the Japanese. They saw the hydropower sources, and hence they would like to establish the alumina refineries there. So they have these natural resources. All they need is to develop them, and that takes time. But of course, there's potential for the import of natural resources as kind of a transition power source, given relatively lower emission. But I guess this is also not only Indonesia, but we look at the Saudi, what they have been doing, given they have abundant natural resources, and also in terms of import and export. So hopefully that they can also establishing a kind of a smelter and refining hub. So if you have ore in Africa, you can easily import into the country, have relatively carbon-friendly products exported to the destination markets. So yeah, we're looking forward to those products coming out of environmental, more
Not
friendly
sure they're going to
destinations?
come out. There'll be export bans, right? So that's another risk. Where you can get the nickel back out again. They're forcing battery companies to set up in Indonesia and do the whole, as you said, complete ecosystem there. But Indonesia is not an FTA. So it's a lot of risk, all right. Rely solely on Indonesia to the point about nickel sulfide product.
So yes, lots of debate around whether Indonesia would join the FTA. Would they be, make themselves IRA compliant to basically fit into North American supply chain? But I guess overnight we have seen what the Japanese government have done. They basically signed agreement with the US government, effectively making Japan a FTA country just for critical minerals. So this basically saves all the time to,
Yeah, I didn't get that. Japan doesn't have the access to minerals either. I didn't get why that was a big celebration. They're in worse position. Except for their mining conglomerates that have been involved, but they don't.
Are the Japanese thinking about building some smelting capacity and producing the intermediary products? Is that why they're doing it?
Yeah, but they're behind. They're behind.
They still have to buy the raw materials. Oh, they're way behind China in terms of that, yeah. But maybe they have a goal. I actually didn't know this. But so they have a goal to sort of compete with China in that way?
It was a celebration that, now we have access to battery raw materials when Japan doesn't provide itself with its own battery raw materials.
I guess maybe just the Panasonic and the PPES. Yeah.
Sure, they'll get there, but.
All right, I'm going to cut that off there because we've kind of hit our time zone, but really interesting panel. So thank you to the three panelists, Cormac, Ling, and Robert, for joining us today.